You beat by a penny and reaffirmed your forecast, so congratulations. Talk to us about cutting headcount and how this next phase of, the strategy is going for UPS, Richard.
Sure. There's really three things that are going on at UPS right now. Not only are we announced yesterday the first step in our transformation initiative, we're also expanding our network and opening some buildings in the later part of this year. And at the same time, we're adding new capability with Saturday operations, where we are now at 50% of the population. And last year at this time, we were covering maybe 3 or 4% because we were just starting out.
Well, you deliver a phenomenal 19+ million packages a day, which is really mind-blowing. Talk to us about price increases. You have said now that a 2 to 3% price increase may not be a ceiling.
It's not a ceiling, it's more of a thought about what services we're adding and how the network's being consumed. I can tell you with e-commerce, the characteristics, the type of packages that are going across the network are different. Remember, this started out as books a decade ago, maybe 2 decades ago, and today people are ordering furniture, refrigerators, everything on the internet. So we have to make sure that we continue to increase our pricing appropriately for how it's impacting the network and the service we're providing.
Can you give us any kind of forecast of what that might be?
Well, on the revenue side, I think it's really going to be a mix of both the type of volume that's in the system as well as the inflationary pressures and making sure that UPS is getting an adequate return for all of the investments. What we kind of hold ourselves to is making sure that our return on invested capital with all that new investments continues to bring the same level of return. And so in some packages, it's going to depend on the customer and the customer characteristics. They'll see 2 or 3%. Other customers could see something much larger. And it's really more on a case-by-case basis.
Now, is this all in an effort to get your domestic margins something closer to what your international margins are? What are you targeting for domestic margins?
Our target for domestic margins before all the accounting changes has been 13 to 14%. And we're still living with that way, but we also understand that because of some accounting changes and revenue and pension and how you account for pension, they moved below the line or out of operating expense. So what we did on the call this morning is actually talk about how it looked when you put it all back together, and it looks very similar to what you would expect for a first quarter.
Now, UPS is more leveraged to Amazon than, say, a FedEx. Amazon obviously needs UPS as well, but Amazon has been really beefing up things like fulfillment services and taking the choice away from the seller, giving the seller the option to just go with Amazon, and Amazon will make all the choices and do the fulfillment. What is UPS doing in order to compete on the fulfillment side with Amazon?
So we have a few beta tests, and we do have a logistics company. It's a big part of our supply chain and freight group, where you saw double-digit both revenue and operating profit growth. And so we do compete in that arena for very specific areas where it makes sense. In terms of Amazon, they're an important customer of ours. We recognize that there are some things they're doing that make sense for UPS to look at and do for them. And at other times, we're going to say that, our solutions aren't the right solution for what they're trying to accomplish. But I will tell you that the portfolio of our solutions work for not only a company like Amazon, but for many buyers and sellers across the internet around the world. And things like My Choice, where we now are at 47 million members. Mm-hmm. That's 47 million people receiving packages who are communicating with UPS about where they want their package and making sure that we're engaging them in the transaction. So
Richard,
we think we have a lot of good...
I was just going to ask if you could give us some idea of what revenue Amazon actually accounts for at UPS.
Well, we have a lot of large customers because the retail space is an area that we continue to concentrate on. We don't disclose any one customer. We do tell you in our disclosures that, there is no one customer that makes up even 10%. So the important thing here is we're a customer to many retailers, many large companies across the globe, and we're trying to find solutions for all of them.
Okay, you have been accelerating capital expenditures. How long does this era last? How much do you imagine spending?
So what we talked about in the call today, this is really the first year of a 3-year peak capital investment. If you think about it right now, we're taking some of the penalty costs, and we get the benefit of some of these larger buildings in the second half of the year. So the real benefit starts layering in 19. We're also going to be seeing some high level of capital for expansion of buildings again in 19. But the point is that there is an end in sight. This is about capability, flexibility, and at the same time, growth. And the growth in our industry is tremendous, and we're taking advantage of it.
There have been some recent changes in the C-suite. What motivated these changes, Richard?
So I think there's a few things. First, we had two senior managers who left after 38 and 40 years, so that's just natural retirement. And then when you look across the transformation and all of the execution of the initiatives, the time was right for a chief operating officer to be named. And so David as CEO and all of us as the team now have a structure that ensures that as we put in new initiatives and we coordinate across our different networks, we're doing it in a constructive way that adds value and creates value for the shareholders.
Now, FedEx has a bigger presence in China. At the moment, that might actually be a good thing for UPS because it looks like with tariffs and so forth, FedEx might have a difficult time. What are your plans for China in the next, say, 5 years?
Well, I think that, there's a lot of talk around international trade, and, we're actually encouraged by some of what we've been hearing of late around the TPP, the China, and the NAFTA. But at the same time, we recognize that our international business predominantly trades across continents that don't even impact the U.S. For example, there's a lot of trade between Europe and Asia and Europe, and Latin America and Asia, and Canada and Asia and Europe as well. So our international business truly is international. In fact, our largest presence is in Europe, where over 80% of that operation is really about trading across the continent.
All right, Richard Peretz, your stock is up 3%. I'm sure you're very pleased about that as we head towards about 42 minutes into the trading session. Thank you for joining us. That is UPS's CFO.